Hi, everybody. Thank you for joining us. My name is David Houston, and I'm the Chief Revenue Officer at Remo First. I have the distinct pleasure of getting to moderate today's discussion. So, unless you've been living under a rock, you know that the last 5 years have had a transformative impact on the way that the world works. And as a result, we've seen a huge influx of new technology and services aimed at enabling those new ways we work. Those new technologies, the new use cases for technology have in turn driven a tremendous amount of investor interest. I think the past 2 years alone have seen over $16 billion in VC funding in the HR tech space. And while new investments have slowed across all sectors, I've seen firsthand that HR technology is one of the segments of the tech industry that is still garnering a ton of interest from entrepreneurs starting new businesses and from investors looking to fund the next generation of companies in this space. And so with that scene set, we're going to hear from a leading investor today, as well as a founder who have had a tremendous amount of experience, but also a lot of success in the HR tech space. And they're going to be telling us about where this sector is going, what trends we should be looking out for, and they're going to provide some actionable advice for HR tech founders who are looking to raise money. So I'm thrilled to be joined by Joe Sajo and Nurasil Sarek. Joe is co-founder and partner at Counterpart Ventures, and Nurasil is co-founder and CEO of Remo First. So I'm going to ask each of our experts to introduce themselves. And Nur, welcome, and I'll start with you to do a quick introduction.
Thanks, David, and hi, everyone. So I'm Nurasil. I'm a founder and CEO of Remo First. We help companies hire people globally in more than 180 plus countries without them setting up their own entities. Our value propositions, we help companies save money while hiring globally.
Thank you, Nur. And Joe, over to you.
Hi, everyone. My name is Joe Sajo, co-founder and partner at Counterpart Ventures. Please excuse me on my weird voices because I got a COVID last week and I still get a stuffed nose. So Counterpart Ventures is San Francisco-based early-stage venture capital fund. We are at now Fund 2 with $110 million. And now we will launch Fund 3 very soon. And we are looking at B2B SaaS and B2B marketplace business at mainly seed and Series A company. For myself, prior to Counterpart Ventures, I worked for Recruit and managed CVC fund there. And my partner, Patrick Egan, worked for Qualcomm Ventures before we launched the Counterpart Ventures in 2018. So our genesis is corporate venture capital, obviously. So that's my brief background.
Thank you, Joe. That's really great. And then for those who are not familiar with Recruit Strategic Partners, you're going to tell us more about it, of course. Prior to Counterpart, Recruit is one of the largest global organizations that covers a lot of media brands, but it included within that, you had some iconic kind of HR tech companies like Indeed and Glassdoor and others. And so I imagine being a part of an organization like that, you had access to all sorts of different insights into the HR tech space. So tell us a little bit about that. How did that kind of shape your perspective? And would love to dive into that. And then we can talk more about Counterpart and your focus from a fund perspective.
Yeah, happy to talk about that. So at Recruit Strategic Partners, which is a corporate venture capital arm of the Recruit Holdings. So we looked at something that might disrupt Recruit business. So I am not sure how many of audiences here know about the company, but as David said, Recruit is a massive HR-related business for more than 60 years in Japan with more than $100 billion market cap today. So they have a bunch of HR business like placement business, job board business, and staffing business. From that perspective, I looked at something that might disrupt Recruit existing HR business. So, for example, I was looking at very aggressively and actively at future work, FOW, right? So as it might kill the Recruit existing traditional business. For example, we looked at business productivity like DocuSign, sharing economy or crowdsourcing From that perspective, I invested into the company called 99 Designs, which is a massive crowdsourcing platform out of Australia for graphic designer. And of course, we are looking at AI. So we invested into the company called Data Lab out of Boston. So that was the investment thesis at Recruit Strategic Partners.
Okay, thank you. No, that's very helpful, and we'll definitely want to go more into that. And those are some impressive companies that you've invested in. I guess shifting to Counterpart's focus, can you talk a little bit more about what types of companies, stages are you typically investing in, and certainly as a part of that, it would be interesting to hear kind of what sort of technologies or segments you're most interested in these days.
Got it. Yeah. So as I mentioned, so we are looking at, Counterpart Ventures is looking at early stage company like seed and Series A.
Mm-hmm.
So in sector, sector-wise, we're looking at B2B SaaS and B2B marketplace business mainly.
Mm-hmm. Mm-hmm.
And then in terms of the sector, so of course, HR tech is one of my expertise and one of my favorite space. And I love to continue to see that. And other than that, one of the most interesting sectors which I found in the past 5 years is digital healthcare.
Mm-hmm.
So healthcare is a massive industry, and that is very interesting innovation out there.
Yeah.
So now we're seeing more and more, senior people in developed countries like US, Japan, and other countries in Europe, and more healthcare expenditures like a piled up.
Mm-hmm.
So Japan, my home country, is super aging society with more than 1 out of 4 people being above 65 years old.
Mm-hmm.
Which is crazy, right?
Yeah.
So it is obvious that healthcare and the insurance system will collapse. And it is no wonder, for example, US government fosters what we call value-based healthcare, where there is more focus on prevention than treatment. And such prevention is where lots of tech pieces like AI, sensors, mobile app come together. Also, healthcare is pretty much adjacent business to HR tech if you look at benefit program at HLMS like Workday.
Great point. Yeah, interesting that you're focused on 2 industries that just have massive addressable markets, right? When you think about healthcare and the future of work in general. I think you probably have an interesting perspective, both coming at it from an investor standpoint, but also kind of from an operational standpoint. You were a part of a multi-billion-dollar global organization, and you had to kind of break into the U.S. market as part of the CVC there. Obviously, with Counterpart, you're managing a team there as well. I guess talk to me about how that experience has shaped your own perspective on HR technology or managing remote teams. I'd be interested to hear more about that.
Gotcha. Yeah. So I have been remote work experience for a long time. So since maybe 2007 or 2008. So at RSP, Recruit Strategic Partners, I managed the team in US and Japan.
Okay.
And at Counterpart Ventures, our team is a pretty much globally diversified background. For example, me from Japan, Patrick and Navi from US, and Thambi from US/India, and Mikey from Australia. So that is our team's background. Yeah. So therefore, it was not that hard to adapt internationally.
Right.
So it is the nature of our team, right? So in terms of technologies, I think we have already had what we need. For example, Zoom, Slack, spreadsheet, back office applications such as TriNet, and accounting, financing app, mobile, laptop, something like that, right? So we are ready to go with those tools, but they are just tools, right? But what matters more is how we embrace the technology for better engagement and the culture. By the way, VC venture capital business might not be relevant to most of the people here because we are not project basis and we do not need any of sophisticated tools after all.
Right. Interesting. Okay. Well, speaking of a business that's also operating remotely, Nur and I probably talk 5 times a day, and he's sitting in London today, and I'm here in Boston.
Yeah.
I guess Nur, shifting to you for a minute here, I would love to hear your perspective. So you've successfully fundraised now twice, including a recent $25 million Series A. Congratulations. I'd like to hear your perspective from a founder standpoint of like, Joe's coming at it from an investor's seat. What are you seeing that investors are interested in today, or in assessing kind of HR tech businesses based on what you've been seeing?
Yeah, absolutely. That's a great question. So I think overall the VC environment has shifted in the last couple of years, and then when I still remember when every other friend founder that I've known, they said everyone told them to grow at all costs, and then that was the motto: grow as much as you can. We hear about the top line revenue, and then just go after that. Um, and then now people are kind of reversed. They want you to be more cautious. They want you to think about your unit economics and everything. So I think it's just people care more about business fundamentals. So if you were one of the few companies who always liked business fundamentals, understood that at one point business has to make money. It's not a charity or a Ponzi scheme where you just kind of spend more money to look better, but rather focus on your fundamentals. Make sure that your business has great margins, great unit economics, and then everything falls into the right business kind of philosophy. Then yeah, I think it is much more appreciated now rather than a couple of years ago where people didn't really care if you were profitable or not. They're like, why not growing faster? But now people care more about your how close you are to become profitable, how good are your unit economics, and then even in the public markets you can see the multiples are different. So I think all of that affected how people are investing now.
Yeah. Great advice, and I think part of that would be true if you were running an AI company, a sales tech company, but obviously focusing specifically on HR tech. I mean, you're both a founder of an HR tech company, but you're a consumer of HR technology, right? We have almost 100 people now in 20 plus countries around the world. So I guess, are you seeing that the bar is higher now in terms of customers who are purchasing HR technologies? Like, what are you kind of hearing in terms of feedback from the market in that regard?
Absolutely. So I think overall there are so many HR technologies, and then there's definitely the saturation in the market of different solutions. The bar is definitely a lot higher for the buyers. They don't have as per se that um, stickiness. They like to try different solutions. So what you need to do is to bring a really, really good value proposition. So in our case, we focus on helping companies save money while hiring globally. So our kind of value proposition is not just kind of help you go global, but save money while going global, not to make it the most expensive thing that will come to you while expanding globally. So, and overall, expanding globally is a daunting experience where people get scared. They have no idea how to hire in different countries. They don't know how much it costs. So that there's definitely bar is a lot more higher when it comes to HR and global HR, and people do want to know exactly how you're going to help them.
Thank you for that. And Joe, I don't know if you have a perspective on that. I guess as you're assessing, potential investments, are you looking at things that are in the need to have category versus nice to have category, or any maybe different way in which you're assessing investments today than maybe you were a couple of years ago? In if you agree with what Nur said in terms of those fundamentals being essential.
Yeah, basically, I totally agree with what Nur said. Of course, I love must have, right? So as we looked at the company, so there are three things we always think of. The first one is there is a huge, massive pain which people are willing to pay money to solve.
Mm-hmm.
So this is a fundamental need for must have, right?
Mm-hmm.
And the second one is always, startup company has to have great product
Yeah.
and the technology to solve it.
Mhm.
And the third is the company, especially founders, have relevant background to know the industry and the customers.
Mhm. Mhm.
So I think those are the 3 points the venture capital always care, and that have not changed for a while
Good.
in terms of investment thesis and investment philosophy.
Thank you. I wrote those down, so I hope that people who are listening wrote those down as well. So those are three really good things to focus on. I think that's actually a perfect segue. So it would be really interesting to hear, kind of how you two got to know each other. Which, for those who are following along, Counterpart Ventures did invest in Remo First seed round back in 2022, and then more recently in the Series A. I guess in that context, like, when did you guys first meet Nur, and kind of what caught your attention about what Remo First was doing?
Gotcha. Yeah. So in 2022, so we met Nur and the teams first time. So we were pretty much impressed with the early traction with Remo First. And the company was and still continue to be incredibly cash efficient, which is a very good sign for potential investor. So that was the most that was something I was impressed most when we met the company for the first time.
Nur, curious to hear your perspective on that. So, like, from your standpoint, how did you, run into the Counterpart team, and talk a little bit about how that early scale, the cash efficiency, like what sort of led to that.
Yeah, absolutely. Thank you so much. And Joe, great to hear all the ins and outs why you guys invested. I think, honestly speaking, we, as Joe said, we were very capital efficient when they invested. We were already profitable, so we didn't really have to raise the money. And then we were lucky enough, in a very lucky position, to have multiple offers, multiple investors, and we were oversubscribed at the seed round. So I think with Counterpart, and then something that I appreciate in life is just transparency, and then getting to know people. And then it was just, Counterpart team was very impressive. I mean, the experience the founders Joe and Patrick had, and the team, it was really good to see that they could add value to us. And then I think when it comes to the rounds where you already have some interest, you have various parties, you just look at the highest impact and value for money. And then Counterpart stood out as one of the teams that could help elevate us to the next level, could share their experience from previous companies, and it could help us get to the new heights. And then that's exactly what happened. Here we are sitting at the Series A, and then very grateful for all the investors that supported us so far.
Good. Joe, I'm curious, like, so the early traction, the cash efficiency, those things are clear. And I guess, did you guys have an opinion about the global hiring market specifically? Like, was that
Sure, yeah. Of course.
Yeah.
So at the time of 2022, that was in the middle of the pandemic, right? So we were seeing, actually we were actively looking at something to solve the issue resulted from the pandemic. So we were seeing, from that perspective, lots of remote work solutions. And seeing the success of other competitors in the market in the local EOR software space. So we knew multiple different models were needed to assess business of all shapes and sizes that needed to hire people around the globe. Yeah.
And I guess, Nur, I'll pitch that back to you now. So, as Joe said, it's not as though there aren't any companies who are trying to address remote work. So presumably you had to stand out in some way to Counterpart, to Moro, to QED, to the other firms that invested in that seed. So, like, what did you focus on to really kind of rise above in terms of looking different, given what's going on in the market?
Thanks. I think, for any founder is different. Some founders use their past experiences to stand out. Some founders use different various things. I think for me, the most important thing is execution. So we were just focusing on execution. We knew that just kind of giving the context to the audience that I'm a no-name founder. I'm a guy from Kazakhstan that has never been in a part of MIT or Harvard or any other Ivy League universities. So I'm not a typical tech founder that comes in and opens the door of Sequoia and says, "Hey, invest in me." So I think for people like me with a different background, with a different perspective, it's all about execution. They don't care where you're from if your numbers are great. So that's something that we focus early on, and we knew that if we just focus on getting things done, everyone would be interested in us.
I love that. We're going to come back to that in a little bit about, kind of the untraditional background, I guess, and how that either, hurt or helped you, I guess, as things were coming along. But we talked a lot about seed because that was when you first, met the Counterpart team. But the Series A is more recent in your memory. I think you still have the scars, but just out of curiosity, like how did the conversations shift significantly when it was time for the Series A, or similar themes that you were just doubling down on?
Yeah, that's a great question. I think overall, as I was speaking earlier, I had prior in the seed, I had a lot of friends raising and then being successful. Series A, and especially 2023, it was a very, very challenging year. A lot of my friends, founders, they couldn't raise. They were advising against raising. Even our board was saying, "Don't raise." And then I think for me the key was that we were just growing. I mean, despite all the headwinds in the world, despite the economical challenges, we were growing nonstop. And then most importantly, we were very cash efficient. So we never lost the sight of being cash efficient. Even after raising seed, we had more than half of the money from our seed round after 2 years of operations. So for us, we knew that this would be a fuel to help us grow even faster. So that was one of the reasons why we decided to raise. But when it came to reality, I will be honest, at some point, like early on, there was like a lot of no's, and you start questioning yourself. Oh my goodness, am I doing it right? Am I supposed to raise money now, or maybe I could wait for the better times? And I think one thing again that helped us again in this round as well is just an execution. And as I said prior, is that investor did care about companies that were able to punch above their weight and then make a dent, meaning despite the very, very bad times, we were growing aggressively. So that was, I think, rare in this market. So just focusing again on execution helped us a lot. And then I think we were just lucky as well. And then this is really, really tough times, but it was a lot more challenging than I expected, to be honest. And then and I'm blessed to be where we are.
Very good. Joe, I guess it's your chance to
Yeah.
hold Nur accountable. Like, is that true? Is that what you guys saw?
That's true. That's true. Yeah. So it is very hard. I mean, like we discussed, the venture capital bar is very high right now.
Yeah.
But I'd like to make one comment here. So there is always innovation during the crisis.
Yeah.
So it is no exception for HR tech.
Right.
So I mean, what Nur said reminds me of 2007, 2008, which is a great recession. But at the same time, that there is huge demand for crowdsourcing.
Yeah.
Do you remember the company Odesk, which has rebranded to Upwork after the merger of Elance, maybe?
Mhm.
I forgot the name. Yeah, I forgot the other company, but there was a company called Odesk. So Odesk is classic cloud sourcing platform, but that grew a lot during the Great Recession, right? So I think that is an analogy of, like a remote work or remote first during pandemic.
Yeah, that is an interesting analogy, and I think we'd agree. Like the demand for global hiring isn't slowing down, right? It's just a different customers
No,
about it differently, all that type of thing. And I imagine that's true for a lot of segments of HR technology as well. So that's great. I guess a question for both of you, and I'm going a little out of order here, but AI is obviously a really hot trend. Like Joe, you've invested in I think over 30 startups in the last 10 years, and are you particularly excited about AI? And Nur, certainly hear from you from the Remo First perspective, but maybe Joe, I'll start with you. And if you think about trends,
Yeah.
that's mega one, and so curious to get your
Yeah.
take on that.
Yeah, of course. So AI is obviously interesting to me. So, but other than that, generally speaking, I have seen very interesting technologies, not only AI, but also like a IoT, blockchain, Web3, something like that. But I'd like to highlight AI is super interesting because that evolved super fast.
Right.
So if you look at if you look at the technology like generative AI, Gen AI, ChatGPT, something like that, growth is super fast.
Mhm.
So now everything is AI. So every app, every application can embrace AI to streamline the process. And HR is not an exception, right? So I always look at the three pillars in HR. The first one is sourcing. The second one is assessment. The third one is onboarding, where Limo First is providing solution.
Yeah.
So at sourcing, AI can deeply profile the candidate by looking at the various data points
Yeah.
and then bring the better matching between candidates and recruiters. That's where Indeed is actively focusing on.
Interesting.
And at skill assessment, AI can discern the candidate's skill set
Mhm.
for both hard skills and soft skills.
Mhm.
And at onboarding, AI can streamline the various workflow like contracts, signups for HLMS, and compliance, and something like that.
Mhm.
And by the way, Limo First, I can populate the job description with AI
Mhm.
to analyze the title. Is that right?
Yeah.
I think that's super cool. So that is really interesting and sophisticated way of adapting AI in HR tech space.
And
And almost lastly,
Go ahead. Sorry.
lastly, also I'd like to say AI can help talent management as well by
Mhm.
recommending lead skilling
Right.
or career development personalized for each of employee.
Interesting. I'd be curious, like just for founders who are listening, and if they're trying to pitch Counterpart today, would it be almost like a knock against a potential investment if they weren't integrating AI in some, like not everybody's going to be an AI startup, right? But if they weren't integrating AI into some facet of their solution or technology, would that be something you would look, unfavorably upon?
I was like, yeah.
Okay, interesting. Good to know. I'll write that down too.
It is market. Yeah, it is like a matter of marketing for startup companies.
Of course, yeah.
Yeah.
It definitely makes sense. Nur, how about you? I mean, how are you thinking about AI, whether it be in terms of Remo First own technology or just things you're using day to day in your own work?
Yeah, absolutely. I think obviously AI is a mega trend that will change lives in the next couple of years, or maybe 5 to 10 years. I think obviously, as Joe said, we do have some elements of AI that we use, but I'm very cautious about data privacy and everything. And then we just try and make sure to abide by the laws for now, and then be cautious of how we use it and when we use it. We don't want some of the things just to come up with the solutions that don't exist. I know AI likes to come up with things that don't exist yet, but I think there's a long way to go. But there's no point of denying it, because it's all about optimizing it. No one is trying to tell you to put Chat GPT and replace everything with Chat GPT, but rather try and use something that is a small use case that could save 100 hours of a human labor. And then that is, I think, the powerful thing is that just optimize your machine, make it better, and then that's the most important thing.
Okay, makes sense. I appreciate that. I have a couple of questions that might be toss-ups for both of you, but what are maybe, I'm biased. I think the HR technology space is a really interesting one. Obviously, we've established both of you do as well, but are there any specific like challenges that the HR technology space is facing that you maybe would have people looking out for, headwinds that people should be aware of?
Yeah, let me start first. Yeah, I mean, it depends on the subsector of HR and tech. Yeah, for example, I think like yeah I think what is losing momentum as of today is just regular hiring platform with quantity.
Mm-hmm, mm-hmm, mm-hmm.
So it depends on the subsectors, like I said. So I mean, if the solution is like a frontline workers,
Right.
I think still works and still bullish
Mhm.
because there are a lot of shortage
Yeah.
in our workforce.
Right.
But on the other hand, skill-based workers,
Mhm.
especially for STEM jobs, I mean,
Right.
just hiring is not a great solution right now.
Yeah.
So that's why I mentioned about AI. So with the power of AI, maybe
Mhm.
we should focus on quality rather than quantity. What I mean by that is with AI, we can discern the
Mhm.
better quality of the skill sets for the
Mhm.
better matching, something like that.
Yeah, great point. And I think, there's been a fair amount of investment into companies like aimed at that frontline worker segment, to your point. I mean, it's just really challenging fulfillment centers and other things with the expansion of e-commerce.
Yeah,
Yeah.
transportation, yeah.
Right. Interesting. Okay, Nur, what about you? I mean, what are some of you're living it, what are some of the headwinds that you might caution founders around?
Yeah, I think especially with AI and then coming future of work and then future of employees, there is a lot of saying that, oh my goodness, AI is going to replace engineers, AI is going to replace customer support, AI is going to replace everyone. And then I think it is still too far away. For now, it's more about empowering those people, empowering engineers, empowering customer success, giving them data faster, helping them to move faster. So I think you're not going to replace every single engineer, but maybe instead of hiring 2 engineers, you will hire 1 engineer who has an extra AI junior person who does all the dirty work, and then they think about orchestration about it. So I think there's going to be a lot of headwinds in terms of utilizing the AI and assuming that they're going to revolutionize everything in the next couple of years. I mean, we are very close, obviously. We don't know if AI is going to take a next step in terms of their becoming at the level of human intelligence. But I think hopefully we are a little bit too far away from that, because otherwise I think it's going to get too boring and then maybe risky. But overall, I think that the main headwind is that not to assume that everything will be replaced tomorrow, but rather take it as an opportunity to uplift your workers and help them be more productive, essentially.
Yeah, great point. I think, nowhere are people trying to disrupt things with AI more than in sales and marketing. And so like, I see that every day. But again, I think to your point, it's like, it's going to make the people who are good at it more effective, as opposed to saying, replace the whole segment of that type of worker, for example. So good point. All right, I have another HR tech related question that actually came from somebody who's listening in. And then I'll shift to some questions maybe more aimed at like founders and growing companies that you both can help with. But on the HR tech space, I'll give my perspective, right? In sales, there's 50 different, kind of tech stack things you can buy to run a sales organization. HR, frankly, is no different, right? There's all sorts of, little point solutions and other things. The question is is there VC interest, Joe, in technologies that could kind of integrate multiple different technologies that HR teams are using? Is that something that you've seen? Curious to get your take if there's VC interest in those kinds of integration solutions.
Yeah, I've seen that before. So I mean, how do I say? What is the best way to describe it? So more and more database, that means more silo inside the company. So it is not only for HR, but also other sectors, other space, or other application spaces. But more database, more silo, then we have to integrate. So it's like a divergence and convergence. So that moves cyclically over the years. So if you look at the companies like a Zapier or Waketo, so that is a perfect example for application integration platform.
Right.
So that is very hot right now because like I said, more and more database, more silo inside the company.
Mm-hmm. I love that. Our colleague Angelica always loves to say there's a Zap for that. She's a huge Zapier fan, so that makes sense. Yeah, I think there's definitely interesting applications there. I guess one more question related to HR tech, and if either of you might take this one. Are there gaps in the space? Like, are there things that people just aren't tackling today from a new technology standpoint, or things you'd love to see founders coming to you with?
Sorry, I beg your pardon. What?
Like any major gaps in HR tech that you think aren't being addressed by companies that are out there in the market today?
Oh, that's tough to answer. I don't know. So I mean, this is not answering your question directly, but I am always looking for the talent management, super sophisticated talent management. What I mean by that is I understand the best performer of the company, and I can like a decouple of the skill sets, or soft skill and hard skill of that profile, and then using that data, I will be able to hire the best candidate, which will become the best performers down the road. So that's something I am looking for.
I think you did directly answer my question. I think somebody should be
okay.
Check for exactly that right now. So Nur, I don't know if you agree with that or any other ideas. I guess if you had really good ideas, you'd probably be trying to bake them into the Remo First solution. But
I think it's tough for me to tell what are the gaps. I mean, I'm specifically focused on my own industry, day-to-day thinking, and we add everything we think it's a gap within our industry. But overall, HR is a huge space, and then the main thing is it's like with food, people will always eat. And people will always hire other people to do some job. So it's an industry that will always be there, even if you have to manage all the robots. It's just going to switch to managing robots. So definitely it's a huge space.
Good point. And Joe, I would argue, the need for the technology you're describing is maybe even more acute in a remote working environment, because you can't necessarily just walk down the hall and assess that individual's talent and apply it to the next interview. Like you really do need technology to support that. So I love that point. Okay, so I'm going to shift to just, talking about breaking into the market. Both of you, Nur mentioned his untraditional background in terms of where he's from or where he went to school. Joe, you obviously came from Japan into the US market at some point in your career. So I guess for both of you, what recommendations would you have to other, founders or investors who are coming into maybe not just the U.S. market, but any new market, and how they would start to, develop relationships?
Yeah, I can talk about like a Silicon Valley, because I moved here in 2007. Everybody talks about like a SF, like SF is a dangerous place to come, and people are not coming back to San Francisco, something like that. So that is partially true, although the entire population has not come back yet to the point before the pandemic. I am feeling tech entrepreneurs are coming back to SF gradually.
Mhm.
So it might sound odd, venture businesses creating something innovative and disruptive in a new school way,
Mhm.
but venture company itself is based on a very old school environment. What I mean by that is venture company is simply not a listed company, right?
Right.
So they do not have to, disclose financials. So
Mhm.
that means there is always information arbitrage.
Mhm.
So therefore, relationship is crucial for venture capitals to invest into those startup companies,
Mhm.
as well as for founders to get funded
Yeah.
by the venture capital people.
Mhm.
So it will be very hard for us to build relationship online.
Mhm.
So that should be why tech founders coming back to SF for networking to meet people in person,
Mhm.
something like that. So that is my advice.
Interesting. No, I love
The
that.
networking is key. Networking is key.
Yeah. Yeah, I agree. No, there's no substitute for that in-person connection. But Nur, curious to get your take.
I actually
You
have
might
the
have-
opposite
yeah,
opinion.
I was gonna say.
I mean, like, I don't disagree. Meaning, there's definitely a time where you need to go to Bay Area, to different places where you want to find investors, spend there a month or two, meet the different people, get connected, and after that, you don't have to be there. I mean, like, we raised everything online, and then that's how most of the people raise it, and that's actually your addressable market is higher, meaning you can pretty much ping anyone in the world, and then anyways, people don't have time to go with the coffee with you every single day, so you're gonna be on a Zoom, you're gonna be on the emails. So I think for me right now, with the new globalized world, thanks to COVID, people are realizing that you don't have to meet everyone face to face. So I think apart from Counterpart, in the seed round, we have not met our investors face to face prior.
Mhm.
And then Counterpart was the one, is because that's when I was telling everyone at the beginning that you need to spend a couple of months. So I was spending a couple of months in the Bay Area, and then that's where I met Counterpart in person, from a networking event. And then I think Joe and Mike will have a better story than I do on that. But apart from them, all my other investors we never met prior investing. And then that's exactly what I mean, is that you go somewhere, you network, and then you can pretty much raise from anywhere in the world. So the advice is that just try to be global, create your social media presence, and then try and reach out to different people, and then don't take no for an answer. And then, I mean, I think that the simple rule is that if someone is not answering you, at least email them 3 times. That's
Yeah.
how I feel about that.
I love it. But curious, Nur. So prior to raising the seed, you raised, you raised a previous round, right? Like a small friends and family round, if you want to call it that. But you had to reach out to a lot of people to get that thing going. So like, what did you do? Like, how did you catch people's attention, as to your point, remotely and without that name?
Yes, similar to Seed, similar to Series A, similar to Angel Round, we did is just reaching out to as many people as you can, finding the people who can intro you. I think the most important thing that people forget is the introduction. So don't be lazy. Find people that you know who can open you the doors, and then that will make your life easier. But everything is a numbers game. It's like in everything you do in life, it's just a percentage. So if you reach out, if the rate of success is 1%, you need to reach out to 100 people.
Yeah.
Mhm.
Joe, we have time for one or two more questions. To you, how are you finding investments? You talked about networking, but how are you finding investments? And then from a Counterpart perspective, how do you think about engagement with companies that you've invested in, after the term sheet's been written?
Got it. The first part is pretty much conventional. So every venture capital says about that. So networking. So we have a vast broader network with founders, venture capital, and other service providers, like lawyers and accountants, something like that. So that is crucial for venture capital to source the deals. So that actually most of the deals we have done came from those network. So that's that's the answer for the first part. And the second one is how. I mean, the question is how do we help the founders and CEOs after their investment? So I didn't talk about our unique asset, which is called Kano Club. So we have very unique asset called Kano Club. So as I mentioned at the beginning, so my partner Palak and I came from corporate venture capital. So that is our genesis of like a corporate ventures. So leveraging our expertise and network of corporate venture capital, we set up the CVC community worldwide. I mean, CVC is corporate venture capital is very difficult to manage because it is very hard to prove itself as a table stake for a corporate. So we set up the community and regularly host the event to exchange the best practice or sometimes even worst practice among the corporates. So that is a source for them. That is a source for the value to the startup companies. I mean, portfolio companies that we invested. So we have more than 600 corporate investors in our platform and 900 in our larger community, and we can provide our portfolio companies with meaningful access to real customers and a strategic partnership or strategic investors from those Lolvex.
And then
So that is
I could probably add to Joe is that indeed. So I think Counter Club, when we was searching for kind of picking the investor, another value proposition that we liked about Counterpart Ventures was that they're very well connected with different CVCs, and then that not only as part of your strategic investor that you can find would it be Zoom Ventures or Intuit Ventures or any other CVC venture capitalists. But also clients, because those CVCs are basically from the company, so they can connect you with anyone you need from a big corporate company. And then that what was very exciting for us, that we in a sense have an ability to connect with any corporate we want through the Counter Club. And I think that is very helpful, and we did utilize that option a few times. So thank you so much.
thank you so much for saying that.
Yeah, I can attest. I think you guys made me look good because a couple of my early wins when I joined Remo First were introductions from Counterpart and Counter Club. So that's good. But well, listen, we're running out of time. We did get to a number of the audience questions about some of the things that you're interested in investing in and what are some of the gaps in the HR space. So first of all, I want to thank you both. And just to kind of recap, I think we all agree there's an incredible opportunity in the HR space. I think you've both articulated really well, like that the bar is high today in terms of, being able to obtain new investment or catch the attention of customers. But that doesn't mean that the opportunity isn't massive in terms of what the addressable market looks like. I think you've both given, great tips on how people can break into new markets and start to develop a network, whether it be remotely or in person, depending on which perspective you're coming at it from. So thank you both. And for those who are listening, Remo First helps you hire in 180 countries around the world in a cost-efficient way. So check us out. And of course, if you're looking to raise money, there's no better place to look than to Counterpart Ventures. So Joe, Nur, thank you very much for your time. And thanks everybody for attending. And we hope everybody has a great rest of their day.
Thank you. Bye-bye, everyone.
Yeah, thank you so much, everyone.
Bye-bye.